Hey guys, it's Charlie, and in today's video, I'll be teaching you how to invest in cryptocurrencies step by step. This is gonna be the perfect guide for beginners. And yes, this course is 100% free to you watching this video. I just think that investing in crypto is right for a lot of people, and I wanna make this type of information really accessible for everyone. So if you are looking for an ultimate guide on how to invest in crypto in 2024 and beyond, then this video is going to be for you. I really encourage you guys, take notes and actually take action on what you learned today in this course. You guys can learn as much as you want, but if you don't take action, then there really is not that much point to it. Down below, we'll have a link to Coinbase. If you use that exclusive link, you'll get up to $200 just for signing up and making your first trade. And later on in this video, I'll show you step-by-step how to actually buy crypto using Coinbase. This is gonna be a pretty long video, but I will say, if you guys stick around until the end, you'll leave with great fundamental knowledge about crypto, how to actually make money investing in crypto, as well as all my tips and tricks. So let's cover what topics we are going to learn in this course. So first, we'll talk about what cryptocurrency actually is. We'll talk about the different types of cryptocurrencies. And of course, since this is a beginner's course, we'll talk about what you need to consider before you actually start investing. We'll go through different types of crypto wallets, how you guys can actually buy crypto. Of course, like I said earlier, we'll go through Coinbase. I'll show you exactly how to buy crypto using the app. We'll talk about how you can do your own due diligence, because the last thing we want is to lose money. And I'll show you guys how you can actually avoid rug pulls and being scammed by certain crypto projects. We'll go through the stats of some really popular crypto coins out there right now. We'll also cover what resources you guys can go to learn more about how to invest. We'll talk about tokens and ICOs, which are initial coin offerings. And of course, we'll talk about the last things you should know, my biggest tips and tricks, and the fundamental takeaways that you guys should get from watching this video. So just a brief intro about myself. I'm Charlie Cheng. I've been investing in crypto for about 6-7 years now. I built up a multiple six-figure crypto portfolio. I made a good amount of profit investing myself, and everything that I talk about in this course, I have learned myself. I've spent many years learning it. So I'm really excited to teach you guys everything I know today. First, let's start off with this. What is cryptocurrency? So cryptocurrency is a virtual decentralized currency that's backed by cryptographic processes. So if we sort of break it down, crypto means cryptography, and that basically just means writing or solving codes. And then currency, of course, is just gonna be money. Now, the thing that separates cryptocurrencies from things like the US dollar is that it is decentralized. This basically means that it is not issued, backed, or regulated by central authority. So for example, the US government. And what this basically does is it gets rid of the middleman in a transaction. So basically, money is sent from your digital wallet to your friend's digital wallet directly. There's no middleman that's facilitating that process. And in this whole decentralized currency thing, we get this sort of shift of trust from banks and governments to impartial decentralized networks. So now let's talk about what a blockchain is. So a blockchain is a distributed ledger that records transactions in a way that is secure, transparent, and tamper-proof. So essentially, every time you send and receive money, it's verified and recorded in the blockchain. I will say there are different blockchains. So there's the Bitcoin blockchain, there's the Ethereum blockchain. They're not the same. And the great thing about a distributed ledger like this, which is decentralized, is that it creates immutable data. So data cannot be changed once it's added to the blockchain. So you might be thinking, okay, that's a decentralized ledger, but what is a centralized ledger? Well, a centralized ledger, aka a general ledger, this is basically going to contain all the accounts and transactions in one single spot. So for example, a bank would have total control over which transactions are posted on their ledger, since they are controlling it. And the owner of the ledger can manipulate or shut it down, which gives it more authority than optimal. Now again, going back to our blockchain, which is a distributed ledger, this is basically just gonna be like a shared ledger. There's no central administrator like the bank. So it's like an asset database that is shared by all the participants within a network. If a change is made on the ledger, then everyone is going to see it. And in this case, there's a lot more transparency. And yeah, we'll talk about that more on the next slide. So now that you know what a blockchain is, as well as the difference between a decentralized and centralized ledger, let's talk about how the blockchain actually works, because this is a very important concept that I want you guys to understand. So I want you guys to think of a blockchain as a distributed spreadsheet of transactions. In this case, multiple copies are saved on many, many different machines, and they must all match for it to be valid. And the process goes like this. The blockchain collects the transaction info info and it enters it into a block. Once that block is filled, the information is run through an encryption algorithm that links that current block with the next block. Hence, we have a chain of blocks. And I know this can seem pretty complicated. I want you guys to sort of understand the gist, but you don't need to know this exactly. But yeah, if you want to learn more about the tech behind cryptocurrencies, we'll talk about the different resources you guys can check out to learn more about this later on in this video. So now let's talk about what crypto mining is. Now, if you're interested in cryptocurrencies, you may have heard about crypto mining. And right now we'll actually go through what crypto mining is. So crypto mining is basically validating crypto transactions and adding them to the blockchain. You're basically doing the work to validate these transactions, and in return, you get crypto as a reward. There are two main types of crypto mining. There's proof of work, POW, and there's proof of stake, POS. So in proof of work, miners basically solve complex math problems to validate new transactions and add them to the blockchain. And as a result, like I said, miners are rewarded with cryptocurrencies for their work. Now, proof of stake works a bit differently. And in this model, miners are rewarded for stacking, AKA locking up cryptocurrencies. So essentially you're going to pledge your coins to the cryptocurrency protocol. And if you hold it there for a while, you will be rewarded with crypto. Miners are then selected to validate blocks based on the amount of cryptocurrency that they have staked. So the more you stake, the more you earn. You guys have probably seen people buying up graphics cards and trying to mine crypto from their home. And yes, while you can do this, there are some risks to it, and we'll cover that in this slide. So the first risk is that it takes up a lot of electricity. For the proof of work mining model, you're basically having your computer solve complex mathematical problems, and that takes up a lot of power. Another risk is that there is a lot of volatility in crypto, right? The price of crypto can be quite volatile, especially depending on what season we are in. And so as a result, the value of your rewards can fluctuate wildly. For example, it's just as hard to mine 0.1 Bitcoin, no matter what the price is, right? So the price of Bitcoin could be $40,000 or it could be $1,000. It takes the same amount of work to mine that 0.1 Bitcoin. So of course, if the price drops, your reward becomes substantially less valuable. But if you are mining when Bitcoin is really, really high in price, then your reward is of course substantially higher. There's also hardware costs. So mining hardware is quite expensive and it does need to be upgraded regularly to stay competitive. And there's security risks, right? You know, it can be quite vulnerable to hacking attacks. So it's really important to protect your hardware and your cryptocurrency. Yeah, this only applies to you guys if you want to do the proof of work of mining model. I'd say for most people, it's probably not worth it. The equipment is really expensive. To really make a lot of money, you sort of need like a dedicated warehouse. And if you want to just mine Bitcoin on your laptop or on a desktop computer, the rewards are going to come super, super slow. It's just not going to be worth it. Okay, now let's talk about the different types of cryptocurrencies that you guys can buy. So as I'm filming this video, these are the top 10 cryptocurrencies by USD market cap. Of course, we have Bitcoin at the very top. This is likely not going to change. Then we have Ethereum, then we have USDT, aka Tether. And then the rest of these, they will often change positions. But when you guys watch this video, it's probably not going to be that different. For most people that do want to buy cryptocurrencies, they are going to likely buy one of these top 10 coins, with of course Bitcoin being the most popular and then Ethereum. Of course, there are hundreds or thousands of different cryptocurrency projects out there. A lot of these are scams. They're not going to do well. And so for me personally, I like to stick with the top ones. These are way more proven. They have a lot more history and the backing is a lot more significant. So now before you guys actually start investing, let's talk about what you need to consider. Because yes, investing in crypto can be quite dangerous. It can be volatile. It's sort of like investing in stocks, except probably a bit more dangerous. So it is important to keep some things in mind. First is supply and demand. So how much money are people actually willing to pay for that crypto? If there is more demand than there is supply, then the price will actually go up. And if there's less demand than there's supply, then the price will go down. Next is going to be scarcity. So the higher the scarcity, the more rare it is, the more limited the supply is. This means that the price is going to go up because of course, like we said, that means that demand is going to be higher than the supply. For example, Bitcoin is trading quite high right now. One reason is because there is a very limited supply of it. Sentiment is also extremely important, you guys. You guys have probably seen this. There's the bull markets, there's the bear markets. And if people are bullish about a specific coin, then that means that the price is likely going to go up since demand is going to go up, but supply will be the same or even lower. For example, if there's a new article about Dogecoin that comes out that really, makes people really believe in it, that's going to drive the demand up for it and increase the price. However, if there's bad sentiment passionate about a project, then we could see a pretty drastic decrease in the price. Next is adoption, right? So the more people that actually use this crypto, the more the demand will go up and the higher the price is going to be. For example, we saw Binance Coin go up because people were using it to pay for fees on the Binance exchange. It was actually being used for something, and so as a result, the demand went up. So next is utility, right? So the greater the utility, the greater number of functional uses for that crypto, the greater the value. For example, Ethereum has done quite well because it actually supports a wide variety of decentralized apps. It's actually used for a specific purpose. It's not just a currency, it actually has a function. And that sort of leads us into technology, and the tech that underlies the cryptocurrency can also affect its value. For example, Solana has the potential to be used in a variety of decentralized finance apps. So having that tech behind it sort of gives it that function, which should increase the price. But yeah, it all really sort of comes down to supply and demand. Now, before you guys actually buy crypto, like I said, there's a lot of risk, and let's cover those right now. So the first is that there is a pretty big security risk, right? Crypto is stored in digital wallets, and these can be hacked. So you definitely have to be aware of this because there have been some pretty big digital attacks that have cost people a lot of money. There's also a lot of fraud and scams, right? Especially for any type of new type of investment. Crypto ICOs, which are initial coin offerings, a lot of these are scams, they're rug pulls, and people lose a lot of money on them. There's also the environmental impact, right? So crypto mining in some cases consumes a lot of energy, and this can be bad for the environment. There may also be a lack of liquidity, right? So the crypto market is still relatively illiquid compared to a lot of stocks, and so it can be quite hard to buy and sell cryptos at a fair price. If we're looking at Bitcoin and Ethereum, those markets are quite liquid, but if you look at some of these smaller coins, there's not that many people buying and selling on a day-to-day basis. So getting someone to actually buy your crypto or actually buying crypto from someone, it can take more time. Next is volatility, right? The price of crypto, it can fluctuate quite wildly, and there's no guarantee for it to actually go up in value. There's also regulatory risks. So governments, they may impose stricter regulations in the future, and in this case, it might be more difficult to buy, sell, and use cryptos. With all that in mind, just know that investing in crypto has made people a lot of money. It's also made people lose a lot of money, but we'll talk about some strategies you guys can use to sort of increase your chances of actually making money investing in crypto. Okay, let's talk about crypto wallets because these are the things that you actually store your crypto in. You can sort of think of them as like a bank account. Since crypto is digital, right, you need a digital place to store the coins that you have. And so cryptocurrency wallets, they are digital files or hardware devices that are linked to the blockchain that monitor and execute crypto transactions. So yeah, like I said earlier, it's sort of like a personalized bank account for your crypto. Every wallet has a public key and a private key. So the public key is sort of like the mailbox, right? This is where people are going to send cryptocurrencies to. Giving people your public key is okay because they can only send money to that key. Now the private key, that's a different story. This is basically the key to your mailbox, and it's used to sign off transactions and validate your public key. Now you guys may have heard this before, but to actually truly own your cryptocurrencies, you need to own wallets that have keys that represent your unique digital ID. This is different than using an app like Coinbase, where basically they securely manage the rights to your private keys, but you don't have those private keys yourself basically. So for most people that start off investing, they will use an app like Coinbase, but for people that get really into crypto, that's where you have actual hardware crypto wallets. So a hardware wallet is an offline storage device. It's an actual physical device that you can hold in your hand. There's the Ledger, which is this picture right here. I have one of these myself. There's also the Trezor. These are popular brands that people use when they want to get a hardware wallet, and they are more secure than software wallets like Coinbase, but they can be more expensive and they're definitely less convenient to use. Then you have web wallets. So these are hosted by a third-party service. They're pretty convenient and easy to use, but they are not as secure as other wallets. Then there's software wallets. So these are basically software programs. They can store your cryptos on your computer or mobile device. They have more advanced features, they have more autonomy, and they are convenient and easy to use, but of course they are more vulnerable to malware attacks. Now, like we said earlier, your keys are just a series of numbers, right? And yes, your wallet can just be a piece of paper, right? It's a document that includes your keys and a QR code maybe. And so for people to actually steal your money and your wallet, they need to steal this piece of paper or even get a picture of it. So it can be secure if you have a safe in your house or somewhere, but of course it can be easily lost or damaged. Now, for you guys watching this video, I recommend just start off by using a platform for investing in crypto. So there are tons of them out there. There's Coinbase, Gemini, Binance, and Crypto.com. All these basically allow you to open up a standard brokerage account. So it's very similar to just investing in stocks. It's a very similar account, the way it's taxed. And so you only pay tax when you realize a capital gain, right? So let's say you buy $100 of Bitcoin, becomes $200 of Bitcoin, you sell it, you have a $100 net profit. In this case, you're gonna be taxed on those gains. That's basically how the standard brokerage account is treated for tax purposes. Now, all these platforms, they have great user interfaces. They're great for beginners, and I will put the links down below if you guys do want to use them. The one that I recommend for most people starting off is just gonna be Coinbase. They have some really great promos. If you do sign up using my link down below, you can get up to $200 for free. We'll also have a QR code on the screen. You guys can just use your phone, open up the camera, scan that QR code, and sign up from there. This is the app that I got when I first started investing in crypto. It's worked really well. They are a very secure company. It's the go-to investing platform for crypto. And yeah, that's for a reason. It's just because it's the best one out there. So now I'm gonna take you guys through a step-by-step walkthrough on how to actually use Coinbase. Again, we'll have the QR code on the screen. I really encourage you guys to follow along, maybe pause this video, take action and sign up for Coinbase. And you guys can sort of follow along as I show you guys how to actually buy crypto. So of course, this is one of the most well-known platforms for investing in crypto. And as you guys can see, I have the balance at the top. And then below that, you have a bunch of different buttons to buy, send, receive, and even do some advanced trading with crypto. As you guys can see, not all of my crypto is in my Coinbase wallet. Most of it is on my ledger. But yeah, if you come down here, you guys can see this is my watch list of crypto coins that I'm currently looking at. And then if you scroll down, you guys can see this is the top movers list. And this basically just shows you which currencies are moving up or down super fast. From there, you just have a bunch of news articles that you guys can read if you want to learn more about the crypto industry. So going back to the top, if we click on the top left thing with those 9 little dots, it's gonna bring up this little profile. And if we come down here to earn more, this is where you guys can actually get some free crypto by doing things such as learning and watching videos. And you can also get 1 month free of 0 trading fees, so that's pretty cool. For example, if I come here to learning rewards and see tasks, you guys can see I can earn up to $19 in rewards by doing these different things. So I do encourage you guys to do that. It's pretty cool. So this is all on the homepage, but if I come here to my assets, and you can essentially see the valuation of my portfolio over time. So over the last month, it's gone from about $18,000 to over $23,000. We can zoom out to 1 week, to a month, to a year, and then even the lifetime of my account. So yeah, as you guys can see, we reached a high of $270,000 within Coinbase. And since then, I've moved quite a bit of that off of the platform. Now, if you actually want to buy some crypto on here, all you guys have to do is click on the trade button at the bottom. From here, we can browse different categories, right? So they have DeFi, smart contracts, currencies, stablecoins, MT platforms, Web3. We have our top movers section, which is also interesting to check out. We can look at new currencies. So these are new to Coinbase. There's the top assets. So of course, like we saw on that previous list, these are the top assets by market cap. And then at the top, we can basically search for any specific crypto. So right now I'm gonna go down to top assets and we'll click on Bitcoin. So if you scroll down, you can see there's more information about this specific coin, as well as all the news that's surrounding it. Every time you wanna learn more about a specific coin, I recommend just coming here and checking out what's on this page. Now, if I do want to buy Bitcoin, what I can basically do is click the buy button right here, or I can come down here and click the big trade button. It's up to you. I'll just come up here and I'll click buy. It's the plus sign. Now I'm going to input how much Bitcoin I want to buy in USD. So if I want to buy $10 of Bitcoin, that equates to 0.0002847 Bitcoin. You'll want to connect your bank account. So I just like to use my checking account, and then I'll click review order. We can set it to invest weekly if we want, but I'm just going to uncheck that for now. It's going to show us how much Bitcoin we're buying, the Coinbase fee, and then the total amount. So then we'll click place order. I'll click done, but I can also show you guys if you guys click buy, and let's say we're buying Bitcoin again, if instead of entering in the amount of USD value you want to buy, we can click this button right here and say we want to buy, let's say 0.0002 Bitcoin. That's going to equate to 7 USD. I don't recommend doing this for most people since it is quite complicated. For example, if you accidentally buy, 0.1 Bitcoin, that's going to be over $3,500. But just know that you can do that. And if you want to sell, we can easily come here to sell. We can say I want to sell 0.02 Bitcoin. Choose where you want it to go to. So we've chosen USDC right here, but we can change that to our USD wallet if we want. We will review our order and then click place order. In this case, I don't want to sell my Bitcoin, so I'm not going to do that. If you guys come up here to one-time order, you guys can click on that and you can choose what type of order you want. So if we click on the limit order, that's going to execute at a target price that you set or better. So this is a bit more advanced. For most beginners, I'd say just do a market order. Don't do a limit order because it is quite a bit more complicated, and the order might not execute if the price is too low or high, depending on if you're buying or selling. But yeah, as you guys can see, you don't have to just buy Bitcoin. There are tons of other coins on here. So for any coin that you're interested in, you guys can click on it, easily buy it using Coinbase. And yeah, that's why I really love this platform. It's because for beginners, it's just so user-friendly and the UI is just extremely easy to learn. Like I said earlier, if you guys don't have Coinbase yet, I highly recommend using my link down below. It'll help support the channel and you guys will get up to $200 for signing up. Okay, so now let's talk about due diligence. This is a very important part of investing in cryptocurrencies, especially for anything that has some risk inherent with it. Crypto, as we've talked about, is more risky than stocks, more risky than real estate probably. This is just based on historical evidence, right? And so before you guys actually buy anything, it is really important for you guys to do your own research and to learn more about what you are actually investing into. So that's what due diligence is. It's basically investigating a business or an asset that you are interested in investing in. And the reason why we do this is to fully understand everything that we are putting our money into, right? This is our hard-earned money. We don't want it to just go to waste. We want to fully understand anything that we are putting our hard-earned money into because, of course, we don't want to lose our money. Now, when it comes to due diligence for crypto, there are a ton of different metrics that you guys can look at. We'll go over what these fundamental and valuation metrics are, and we'll also cover some of the qualitative indicators that you guys can look at. So first is market capitalization, your market cap. This is the total market value of a crypto, and it's essentially the total coin supply multiplied by the latest trading price. So if you have, let's say, 1,000 coins total for that crypto and each coin is $10, that means our total market cap is $10,000. It's essentially the same thing as the market cap for a stock. Now there's also the network value to transactions ratio, aka the NVT ratio. This is the PE ratio of crypto, right? So PE, the price to earnings ratio, that's used for stocks. But for cryptos, we use the NVT ratio instead. So to calculate this, we take the market cap, which we just talked about, and divide it by the daily transaction volume. The lower this number, the better it is. So ideally, we want this under 10. That's when it's most healthy. And then if it's over 20, that's when it can be overvalued. But just looking at this number by itself, it's not going to determine whether something is a good or bad buy. It's just one of many different metrics that you guys can look at. There's also the circulating supply. So this is the number of coins that are circulating in the market. It's important to consider the total supply when evaluating potential for the coin to appreciate in value. And there's also the total supply. So this is the total number of coins that will ever be created. This is also a very important thing to consider when evaluating the potential for value appreciation in the future. All this information you can find on these different websites like CoinMarketCap as well as CryptoCompare. They're also usually available on the investing apps as well. Another valuation metric that you guys should know is market dominance. So this is the relative size of a coin. This is the percentage of the total cryptocurrency market cap that is held by a particular coin. So for example, Bitcoin, it's going to have the highest market dominance. It's the #1 coin, and that's because it has the highest percentage of the total cryptocurrency market cap. That's the market cap of every single coin out there in the world added together. Now moving on to indicators, it's important to look at the community support. So this is essentially the interest in a coin's project. And you can sort of quantify this through community events, GitHub activity, social media activity, and other things like that. In addition to that, there's developer activity. So how much work is actually being done on a coin's code base. This can be quantified through GitHub contributors, pull requests, code quality, and the number of issues. Another thing you guys can look at is look at the website. Consider a crypto sort of like a company, right? And a company that has a really bad website, you're probably not going to want to invest in them or think that they are legit. So I like to consider the aesthetics of a website, the design, as well as the professionalism. And one thing I do is I try to avoid websites that have click here to learn more. And one thing I'll say is that just because a website looks good aesthetically does not necessarily mean that it's a legit project. Today, it's so easy to make a nice looking website and just have a bunch of technical nonsense on it. So you do want to look at what information does the website actually present. You can also look at the creators, right? So look into the reputation, technical background, and trustworthiness of whoever's creating that project. Sometimes we don't know who the creator is, such as Bitcoin, but for most projects, we are going to be able to see who the creators are. And I sort of like to look at it like this, right? If you're investing into a company, you care about who the CEO is. And the same thing goes for crypto. Now, if you're a coder yourself, you guys can actually go to GitHub and maybe check out the code of a project. This allows potential investors to examine the crypto network's code to see if it looks good or bad. Most of you guys probably won't do this. I don't know how to read code at all, but just know that 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 is a possible way to look at how the project is going. Another qualitative indicator is the total addressable market, the TAM. How will this particular crypto appeal to the market it's actually addressing? And is this particular crypto creating a new market of its own, or is it sort of just piggybacking off another crypto project that already exists? We want to look at how large this potential market is, and that sort of relates to the use case, right? Like what sort of utility or value can this crypto bring? For example, XRP, it has a good amount of value and utility. It can be used to send and receive payments. You can exchange it for other cryptos. You can trade on crypto exchanges, and it can facilitate cross-border payments. Also look at the tech. So look for a project with innovative tech that has the potential to solve real-world problems. And then also consider the regulatory environment, right? So it's still evolving since crypto is still relatively new. So it is important to consider the regulatory risks associated with a particular project. Above me is a crypto regulation world map. This is probably going to change at some point, but for now, the red areas are where crypto assets are generally prohibited. Green is where they are generally allowed. Yellow is where they are sort of restricted. And then white is where there is regulation pending. We're going to go over a few different cryptocurrencies. This is not a recommendation. This is just going through some of the stats of some of the more popular coins out there. And yeah, I'll show you guys how to basically use the site to do your own research and due diligence. So let's say we want to check out Ethereum, right? We'll click on this. You guys can see it's number 2 right now. And essentially this site shows us a ton of information that we can learn from. It has the market cap right here. It's going to actually give us the definition if you want to check that out by putting your cursor over the I thing right here. It's at $221 billion right now, so huge. The volume over the last 24 hours, which is basically how much a cryptocurrency was traded in the last 24 hours, that's about $5.27 billion, which is down 29%. We have other stats here like the volume divided by market cap. We have the circulating supply, total supply, max supply, and here they have official links, so you guys can check out the official Ethereum website. You can actually check out the white paper right here, and you guys can look at the GitHub as well. They also have social media platforms, which you guys can look at. They have ratings, they have network information, they have converters. So yeah, it's a really good resource that I recommend checking out. Over here, we have a chart of the price. So as you guys can see, this is over the last day. We can go to the last month or year. If you go to the last month, you guys can see we were at about $1,500 within the last month, but now we are at $1,800, and that's a pretty cool jump. Of course, it's going to be different by the time you guys watch this video, but I just encourage you guys, it's fun to look at the price movement. And if we go to all, we can see the all-time price movement. You guys can see we hit a high of close to $5,000 per Ethereum. And since then, it's sort of dropped down to under $1,000, but has almost doubled since then. But yeah, as you guys can see, this is super volatile. That's why I say investing in crypto can be quite risky. And yeah, we'll talk about how much you guys should invest later on in this video. If we come here to analytics, you guys can see the addresses by holdings, the number of whale holdings. You guys can see what other cryptos people are watching. This is going to be like a little summary of the price data. If you come here to about, we can learn more about what Ethereum is, who the founders are. It's a pretty cool FAQ, frequently asked questions. We can learn more about the team, different organizations, investors, allocation, so the token distribution. And yeah, let's go back to the homepage. Let's check out another coin. So let's look at XRP, for example. Again, check out all this information on the left over here. Look at the price movement as you guys want. Over here, we can see the mentions on social media, which can be quite interesting. And yeah, going back to the homepage, you guys can basically scroll all the way down. Look at all the different types of projects and cryptos out there. As you guys can see, there are a lot of them. For most of you guys that are watching this video, I don't recommend scrolling too far down. You might get sidetracked. Just stick with the top 10 things for now. But of course, do your own due diligence and don't buy something just because other people are buying it. Now, another important part about cryptocurrencies is the white paper. So this is basically a document that's created by the creators of a crypto to help sell the crypto. Essentially, it's going to include a bunch of facts, diagrams, statistics, and quotes. And it's a lot more technical, right? Most people are not going to really be able to understand it, but there is a general structure that they follow, and we'll cover that right now. So first you have the abstract, which is basically like a summary. It's the same as any type of research paper. And then you have the introduction. So this is going to present the problems that this crypto project is aiming to solve, as well as the proposed solutions for it. And that's going to talk about the underlying technology. So what type of tech actually backs this crypto project? It's likely going to cover the transactional tech, so how this crypto is exchanged. It's going to talk about the mining tech, So how is this crypto actually mined and created? And it's going to talk about the network tech, which is how is information communicated within the network. It'll then talk about the incentives. So why should you actually participate in this crypto network? They'll have an emission plan. So how will the creation of new coins or tokens be conducted? They'll then have a conclusion. So it's going to review the presented information from before, and it will have references. So your sources and citations. So I'm here at whitepaper.io, and this is basically the white paper for Tether. So as you guys can see, we have the abstract, table of contents, introduction, and all of the sections that we talked about. So of course, most of you guys are probably not going to read an entire white paper. They can be quite long. For example, the white paper for Bitcoin, let's check that out. Here it is. It's 9 pages. We have the abstract intro. It talks about how transactions are done. And yeah, it is quite technical. So for you guys that are not that technical, it's okay. You guys can read a summary of it, and that should be enough. Now let's talk about some resources that you guys can check out to learn more about crypto. This video that you guys are watching, it's more for beginners. It covers all the fundamentals that you guys should know. But if you guys do want to stay up to date with the crypto market, since it is always changing, then you guys can just basically pause this page, check out some of these sources. And yeah, one thing with crypto is that prices of crypto, they really do depend on buyers and sellers, news, sentiment, all that stuff. And to stay up to date on those things, of course, you need to be always reading these types of things. And that's going to give you a much better picture of what's happening in the crypto market. So yeah, reddit.com, they have a bunch of subreddits for more niche crypto subjects and topics. And yeah, these are some of my favorite places to stay up to date on things. So definitely check some of these out. So now let's talk about tokens and ICOs. So what are tokens? Tokens are units of value issued by crypto startups that represent pieces or shares of a crypto network. They are a bit different than coins, but essentially they're sold for fiat or cryptocurrency to raise money for a startup. And it can be issued by Ethereum, Waves, EOS, and there are 2 main categories. So there's the utility tokens. These are used to access a particular service or platform. They can also be used to pay for transactions on a decentralized exchange. And there are security tokens. So these represent ownership stake in a company or a project. So some example of coins are going to be Bitcoin, Ethereum, Ripple, but some examples of tokens are going to be Tron, Bytom, VeChain, stuff like that. And then initial coin offerings, ICOs. What are these? It's basically a fundraising method in which new crypto projects raise capital by selling tokens to investors. So in stocks, we have IPOs, right? Companies, they can, have their initial public offering, but in the crypto world, they have an initial coin offering, and they allow you to basically purchase tokens of this new network. The first thing I'll say is that ICOs, they are extremely, extremely risky because there are plenty of ICOs that have completely failed or turned out to be fraudulent. And this whole sector, it's pretty unregulated. So if you guys do want to participate in ICOs, what you will do is you'll register for the ICO through the network's website. You'll get either Bitcoin or Ether because these are the 2 major cryptocurrencies. And you'll be able to see on the network's white paper what the minimum amount you need to invest in is. You'll then move your Bitcoin or Ether to your wallet. Make sure that it can support the ERC20 token standard. And you'll buy ICO tokens by sending your crypto to their address. If you guys want to participate, you're going to need to decide where to buy ICO tokens. So you're going to have to choose a trustworthy ICO exchange. You'll want to set up an ICO wallet. And yeah, this is a pretty complicated process. So I do recommend doing some more research. Use a site like CoinList. Of course, do your own basic due diligence before purchasing, and then you'll purchase your tokens. And one thing you want to do is join that protocol's social media communities to keep up to date with what's happening. Now, I do want to give you guys some words of caution because crypto, it is risky like we've talked about. There have been some very, very big projects that have completely failed and very, very few people expected it. For example, there's the crash of Luna. So basically Luna lost 99.9% of its value in just a matter of days. It crashed because Luna is linked with a stable coin called UST. The problem is that this was the only thing supporting the value, right? So nothing was supporting the value of Luna besides UST. Later on, Bitcoin would be added to the reserve pool to support the UST value. But as Bitcoin lost value, UST also lost value. And then people started to sell off Luna to support UST since they are linked. And there was this sort of downward spiral, and that led to the Luna crash. Some people also believe that the Luna crash was made worse by a short seller attack. But essentially, the whole Luna crash occurred during a broad sell-off throughout the crypto market. So what can we learn from this, right? Well, algorithmic stablecoins, they have their own risks. These are complex systems that rely on algorithms, which can be flawed and vulnerable. A lot of people thought that having an algorithm stablecoin made Luna really, really good, but it's just a reminder that cryptocurrency markets are volatile and they can be extremely unpredictable. Luna was a heavily backed project. They had massive support and an active community. If you guys remember, the Terra ecosystem was absolutely massive, super popular. And this shows that even the most heavily backed assets can experience catastrophic meltdowns. I do know a lot of people that lost a ton of money, and so it is something that you guys should be aware of. This can happen again in the future. In addition to ICOs, there are also rug pulls. And this is basically when a ton pumps their project's token before disappearing with the funds and leaves their investors with a worthless asset. There are three main types of rug pulls. So there's liquidity stealing. This is basically when token creators withdraw coins from the liquidity pool, and it removes all value injected into the currency by investors, and the price goes down to zero. There's also limiting sell orders, and in this case, the crypto developer codes tokens so that only they are able to sell them. As a result, investors are trapped in the project and they are unable to get their money out. And there's also dumping. So this is basically when crypto developers sell off their own tokens and the price of the token plummets and never recovers. There's also hard and soft pulls. So hard pulls are when a crypto developer codes malicious features into the token smart contract. This allows developers to steal liquidity or dump tokens on investors. So in this case, the intent to commit fraud was clear from the very start. Then there's soft pulls. So this is basically when the crypto developers dump their own tokens on the market and the price plummets. Now, dumping is unethical, but it may not be a criminal act like actual hard pulls. But in both of these cases, the price drops dramatically, goes to basically zero, and almost everyone loses their money. To avoid rug pulls, which I really want you guys watching this video to do, make sure you do your own research, right? Look into the project details, look into the developer history, avoid projects that sort of promise high returns with low risks. That's a huge red flag. Of course, don't invest more than you can actually afford to lose. Be wary of projects with locked liquidity. If there's too much that's actually locked, then you can never really realize any gains. And then also use a reputable cryptocurrency exchange. The shadier exchanges out there, they do have less protections. Now let's talk about some of the last things that you guys should know. And I want to say thank you guys for sticking with me this long into this video, but we're almost there at the end. A lot of you guys watching this video, you might be very busy. You don't really want to do research on particular coins. And the good news is that there are some index funds that you guys can actually invest in to invest in crypto long term. So there's the Bitwise 10 Crypto Index Fund. This is going to track the performance of the top 10 cryptocurrencies by market cap. There's the Grayscale Digital Large Cap Fund. This tracks the performance of the top 50 cryptos by market cap. There's the Valkyrie Bitcoin Miners ETF. This tracks the performance of a basket of companies that mine Bitcoin. And there's the Global X Blockchain ETF. This tracks the performance of the Sol Active Blockchain Index, which is basically an index that's designed to measure performance of companies that are involved in development, implementation, or utilization of blockchain tech. So yes, you can sort of invest in crypto by just buying ETFs and stocks. Before we finish, I do want to talk about taxes because yes, you can make money with crypto, but if you do, that's good, but it's also bad because you do need to pay taxes on any profit. Essentially, cryptocurrencies, they are subject to ordinary income and capital gains tax. Depending on when you sell after you buy it, it's going to be either of the two. Now, ordinary income is between 10 to 37% tax. That's the federal tax. That's the same tax that you would pay if you were to go out and make money doing your job. The reason why there is a range is because the percentage depends on how much money you make in a given calendar year. Now, there's also long-term capital gains and short-term capital gains tax. Now, in terms of capital gains tax, there's going to be two different types. The first is long-term, which is what we want. If you buy crypto and you sell it after 1 year, the profit that you make is going to be subject to between 0 and 20% based on your income level. For most people, the long-term capital gains tax is going to be significantly lower than their ordinary income tax rate. However, if you buy crypto and sell it within 1 year, that's when you're going to be subject to short-term capital gains, which is exactly the same as ordinary income taxes. That's why for most people, the best strategy is to HODL, hold on for dear life. The reason why this is such a popular strategy is because historically, this has done extremely well for stocks. It's also done extremely well for crypto. And it also encourages you to hold on to something for over 1 year, which can avoid that short-term capital gains tax. You might be thinking, if I hold on forever, how do I actually access the money? Well, there are ways in which you can actually take out loans against your portfolio. So that is one way that a lot of really rich people use to access their money. People just don't want to sell because that creates a taxable event, which means you have to pay taxes. So instead they take out loans against their portfolio. Now, how much money should you guys invest? And the recommendations, they sort of vary. Some people say you shouldn't invest more than 1 to 5% of your net worth in crypto. Some people are definitely more bullish on crypto and say you shouldn't invest more than 10% of your net worth. But yeah, this is a hugely personal decision. It's called personal finance for a reason because it's personal. Only you know what the best thing to do is. And yes, this does take some pondering. This does take some time looking at all the factors within your own life. to determine how much money you want to actually invest in crypto. Now, I will say that to be safe, you want to invest money that you don't need to live long term. If what you're putting into the market is going to affect your ability to actually, pay for necessities and live life, then that's going to be a little bit risky. I probably would not recommend it. So of the money that you can invest into assets, maybe consider investing a smaller fraction of it into crypto, since it is still relatively volatile and risky. But if for some reason you do some research about crypto, you think it is the best thing in the world, and that's when you can have probably a higher risk tolerance. Just know that there are tons of other things you guys can invest your money into. It doesn't need to be just crypto, but I will say getting your foot into the crypto world, it can be pretty good, but just know that there are index funds, retirement accounts, real estate, tons of other things that you guys can put your money into. Now, I will say I'm not a financial advisor, so these are just my opinions, but the bottom line is this: it depends on your financial situation, it depends on your risk tolerance, and it depends on your investment goals. For me, while I like crypto, I'm not like the biggest crypto fan. I'm not obsessed with it. So I try to keep under 10% of my net worth in crypto holdings. But for you guys, it's gonna be, like I said, completely dependent on your own situation. I just think that it is good to get your foot in the door, at least invest a little bit of money, but just know that it is volatile and you could lose it. So now, what are the actionable steps that you guys can take right now? You guys already invested a good amount of time watching this video, and so to actually take action on this information is extremely important. The first thing you guys need to do is use the link down below or the QR code and open up a crypto investing account with Coinbase. Like I said earlier, you'll get up to $200 when you do sign up using my link. And it's also going to help make courses like this completely free on YouTube. Because I spent a lot of time creating these slides, filming this video, editing it. And so if you do want to say thank you, then one way you guys can do that is by using our link. And I will say thank you so much in advance. Next is you'll fund your account. So you'll deposit money from your bank account. Then you will do your due diligence. So you'll fully understand what you are investing your money into. And then you can invest some money into the crypto of your choosing. So pick wisely, since crypto can be quite volatile, and only invest what you can afford to lose. It doesn't end there. You'll want to keep doing research. You want to learn more about crypto. You may want to put more money into crypto in the long term. And just know that the market is still growing, it's still evolving, and things are changing every single day. What I will say is this: you do not want your money just sitting in a normal checkings account, not growing and just losing value to inflation. There are so many things that I think you should put your money into. Crypto can be one of them, but you guys do want to, weigh the risks, look at what other things you guys can put your money into, such as stocks, real estate, investing into yourself or your own business, and think what makes the most sense for me right now. For me, since I like to diversify my stuff, I like to put money into everything, and that also makes my portfolio more well-balanced and more safe in case something bad happens to one of them. But anyways, thank you guys so much for sticking around until the end of this video. I really hope you guys learned a lot from it. Feel free to reference this video at any point. If you guys have any friends that are trying to start investing in crypto, make sure to send this video to them. And I want to say best of luck on your crypto investing journey. This is just the start, and it's going to get really, really exciting. If you guys enjoy the video, make sure to hit that like button and also subscribe for more content just like this. I do a ton of videos about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.